I've never been a big votary of gold. I've always been in equity because at the end of the day, there's only a limited amount of gold you can buy. Timing in the market is more important than timing the market.
We want to do a quick rapid fire with you. We always say "maa sahi hai." Do you think that gold, with what has happened with it, still looks like that option that you should always consider and listen to your mother as well?
Yeah, she did say that. Unfortunately, I've never been a big votary. I've been wrong. Markets have done well. Gold has done well. I think what I find surprising is that all asset classes do well. Risk-on assets like stocks have done well. Risk-off assets like gold, bonds, currencies have also done well. Bitcoins have done well also. So just about everything has moved up. I think the reason for that is the gush of money coming in through capital expenditure in terms of AI. That explains part of the stability that we've seen in markets, despite some very poor economic policies being followed by the West. That's there. I've never been a big votary of gold. I've always been in equity because at the end of the day, there's only a limited amount of gold you can buy. It doesn't pay a dividend and you can't carry it around. So I would stick to prefer to equities, but gold has done well. We have to acknowledge that.
We generally see a lot of trends forming in. What are you seeing currently in terms of that investors should watch out for during this Diwali?
I think what happened in November 24 when Trump was elected was the world changed. And I think what we are now seeing is the impact of that world changing. So what used to be formerly what called very benignly the Washington consensus of how markets behave and how economies behave is now being replaced with what I call the Mar-a-Lago mandate, where the world is going to be one person looking after themselves. Every country is going to follow a policy called Atmanirbhar, fill in the blanks of the name of the country. So I think investors need to be attuned to that and understand that while the world will continue, it has changed and changed dramatically.
We've seen GST rate cuts, one of the biggest move for consumption. We've seen income tax rate cuts. We've seen RBI rate cuts. Do you think now is the time that we, look at those areas which lead to eventual consumption boost?
I think the first problem is a lot of people are trying to time this market, and my answer is that always timing in the market is more important than timing the market. I think just imagine when I started my career in the Bombay Stock Exchange, the index, the Sensex was below 800 if you can believe that. Today it's over 80,000. It's a 100x forward, and everything that could go wrong in India in the last 30 years has gone wrong, but we've overcome that. So the first consensus is not whether you buy or not, but just buy good companies and stay invested in them. And then as you get more used to the market or more used to or more insights, then you can selectively buy that I want to move from defense to say railways, or want to move from construction to something else. So that is the long-term call. But the first call is what most investors are doing for the last few years correctly, is getting invested, getting their feet wet in the market.